All right, so what's up, guys? In this video, we're gonna get a little bit more technical and break down some numbers, but I'll try to do that as simply as I can without making it seem too complex or losing you, and I'll give you as many examples as we want. So today, we're diving into the absolute lifeblood of measuring your performance on the charts. You've probably had traders throw around terms like pips, pipettes, and points, but pips mainly. Points, a lot of futures traders use points, but if you look at maybe a metal like gold, it'll also be measured in points. Pips and points are usually the main ways that people actually measure price movement on the charts. But what exactly is a pip? So a pip stands for the percentage in point, right? Pip, PIP, percentage in point. It's simply the standard unit of measurement used to express the change in value between two currencies. Okay, so measuring the change in value between two currencies, that is what we call a percentage in point or a pip. Think of it like a single cent, right? Like a single cent when you buy a regular product. Except in Forex, we look at numbers on a much more microscopic level, but it's the very basic base level measurement of currency or price change. So for most currency pairs, a pip represents the fourth decimal place in a price quote. So let's look at an example that we're commonly using throughout this series, which is the euro against the dollar, your euro USD. If euro USD goes from 1.1050 at current market price up to 1.1051, that 1.0001 rise in value is what we call 1 pip. Things like the Japanese yen pairs are major exceptions to this one particular rule because they are not denominated in 4 decimal places. So if you look at your charts or your trading terminal, you'll notice exactly that. Why is this? This is because the yen has lower nominal value, and so it has lower nominal value and its price quotes only go up to 2 decimal places. So if USD JPY moves from, again, a simple example of 150.01 to 150.02, then that is a 0.01 shift in 1 pip, okay? Second, if you look closely at your MT5, or broker dashboard, you'll notice that a tiny 5th digit sitting at the very, very end of that quote, that 5th digit, sometimes usually like a tinier number than the rest. So then that 5th digit is what we call a pipette or a pipette or a fractional pip, basically. So a pipette is simply a 10th of a pip. So if GBP USD, assuming, goes from 1.30542 to 1.30543, then that 0.00001 movement is what we are calling the pipette. Okay, so 4th decimal place is the pip, 5th decimal place is the pipette. So think of it like a millimeter on a ruler, right? So we have centimeters and millimeters. So the centimeters is the pips, the millimeters will be the pipettes. It just gives the market a cleaner, high-speed electronic precision. It's a lot of math, but you don't really need to get stuck up in the complexities of it. So now let's look at why some of these things actually matter for, our account equity or the money that we're actually trading. So every currency has a different relative value, different relative values, okay? Every currency. So euro has a different relative value to the dollar and to the Japanese yen and to the Great British Pound, so on and so forth, right? So because every currency has a different relative value, this means that the exact value of the single pip change that we are seeing on the chart depends on the pair that we are trading, okay? So not every pair will have the same value in terms of movement of a pip. So let's look at a quick example, right? So a pair that I don't necessarily look at, but some guys usually find it, especially swing traders, live to trade it, is USD CAD. So if USD CAD, which is the dollar against the Canadian dollar, is trading at 1.0200, right? 1.0200. So if you take 1 pip shift, which is 0.001 Canadian dollars, and you divide it by this particular currency exchange, which is 1.0200, right? We take 1 pip, divide it by the currency exchange rate, then we get the value per unit traded in dollars, okay? So if you're running a position size of, let's say, a mini lot, which is 10,000 units. So a single pip change on USD CAD is worth approximately $0.98, okay? So if we change that pair again to GBP JPY as an example, at an exchange rate of 1.2300, and a 1 pip move on that same 10,000 unit micro lot position works out to about roughly 0.81 British pounds, right? So then the final step to our system here, translating the value back into a specific account currency. Follow me here. So if your trading account is funded and measured in dollars, okay, so then you need to know exactly what that GBP or CAD value or JPY value means for your bottom line, right? So if we take that JPY example, that GJ example, with a pip value of 0.813 pounds and convert it using a standard GBP USD rate of 1.5590, you just multiply the two figures. So then suddenly that exact same 1 pip move translates to $1.27 inside of your account balance. Does that make sense? So now if you're sitting at your desk looking at these formulas and rolling your eyes thinking, well, Will, do I really need to run long division math every time I want to place a trade? Well, the answer is a massive, definitive no. We keep it practical here, and these are just examples, just so that we have a baseline and a baseline understanding of what exactly is happening in the charts and in the markets. So in the real world, your modern trading platform and broker software will calculate all these things automatically in a millisecond. And the moment you open a position, you will see these numbers playing out instantly. So if you ever want to plan out a trade beforehand, you can just simply pull up a free online, maybe pip value calculator. I myself use a tool called Magic Keys that helps you do that. There's an app as well, link down below, that can help you calculate all these things. All you need to input is the pair you're trading, your stop loss value, and it calculates everything else for you. Okay, so you don't need to be a math genius to do all these things. There are tools out there that can help you actually calculate all these numbers, simply put, where all you have to do is just identify your trade potential and calculate your risk and enter the market and manage that position. But as a professional running a business, I mean, okay, fine, knowing how the machinery kind of works under the hood is what keeps you grounded and prevents you from making, reckless mistakes out there that can cost you your hard-earned money. So then once you understand how pips measure the distance in the market, then the next step is combining all this information with your position sizing to manage your actual risk. So in the next video, we're going to dive straight into how these tiny pip values kind of stack up when using different lot sizes, so you can scale your income over time and compound it safely. Well, guys, I'll see you in the next chapter. Cheers.